Okay, it is 3:33 p.m. by my clock. I think we can go ahead and get started with everyone's permission. Would like to begin. So good afternoon, everyone, and I wish to extend a warm welcome to all the attendees of this webinar titled E-invoicing 2.0 Challenges and Way Forward. Let me introduce myself. I am Shyam Karigiri. I am the chairman of the Karnataka branch of IACC. In today's webinar, we will be addressing a very important aspect related to e-invoicing. Going back historically, a very significant development in India in the finance sector was the introduction of the Goods and Services Tax, GST, back in 2017. I would not hesitate to state that the second biggest development since then has been the e-invoicing reform that came into effect of October this year. As on date, the authorities are indicating that the mandate has been hugely successful and based on which the next phases are being rolled out. With a view for our members, IACC members, to better understand the new invoicing system and its requirements, IACC partnered with our tax technology partner, BDO, in bringing forth this informative session. BDO is a leading professional services organization and are global leaders of the mid-tier, operating in more than 167 countries. BDO offers assurance tax, advisory, and business services and outsourcing for both domestic and international clients across a range of industries. I wish to welcome the two speakers who will engage you with rich information and guidance over the next hour and a half or so. Before I introduce them, I just wish to explain how this webinar will work. All the attendees will remain on mute and in listening mode only. If there are any questions that you would like to ask, you may please ask them through the chat feature, and the speakers will address them towards the end of the session. So you should be able to see that in the banner, the chat feature. So if you have any questions, kindly post your questions there, and the speakers would gladly respond to that towards the end of the session. I now wish to welcome and invite the two speakers, but let me introduce them first. Abhinav Srivastava, who is a partner with the indirect tax practice, and he operates out of the BDO office in Hyderabad. Prior to joining BDO in India, Abhinav worked with large accounting firms and has over 12 years of experience specializing in indirect tax. He has also worked on several assignments in the areas of tax structuring, due diligences, diagnostic reviews, and litigation across various sectors such as IT and IT-enabled services, pharmaceuticals, healthcare, media, and education. Abhinav is also involved in advocacy with policymakers, representing various industry associations and chambers. Abhinav has also authored various articles pertaining to indirect tax in tax-related publications. So Abhinav, I extend a warm welcome to you as the first speaker. And our second speaker is Karthik Mani. He is a director in the indirect tax practice. He began his career at a large accounting firm and worked for over 4 years prior to joining BDO. Karthik has more than 8 years of experience in the field of direct taxes. His areas of functional expertise include GST, service tax, customs, and SEZ. He has assisted large manufacturing clients having diverse businesses in GST audits and assessments. Karthik, I extend a warm welcome to you as well. So ladies and gentlemen, without further ado, I call upon Abhinav and Karthik to take the proceedings forward from here on. Thank you. Over to you, Karthik and Abhinav.
Thank you, Shyam.
Okay, so thanks, Shyam, for your kind words of, am I audible before I sort of, audible, right?
Yes, sir.
Yeah. So thanks, Shyam, for your kind words of introduction, and a very good afternoon to all of you. So, as Shyam mentioned that we will first run through the slide deck for the first 45 50 minutes. And after that, we will address whatever questions that you might have. You can use the chat box feature to sort of post your questions, and we will try to address all the questions after the end of the presentation. And in case there are still some questions which are left unanswered, or you may have some follow-up questions, do write to us. We will share our contact details with IACC, and through them we will try to respond to all the queries that you might have. Now, let me now start the sort of presentation, and I would request Karthik to upload the slide deck. Now, let me start by giving you a broad perspective about e-invoicing, and I will pick up the thread from Shyam's conversation a couple of minutes back. Now, as you're aware that government is trying to automate the entire GST compliance ecosystem. Okay, and e-invoicing is one of the more important milestones in that initiative, and this is quite evident from the series of events that have unfolded in the last 2-3 years, and I mean more since after introduction of GST. So if you recall, in 2017, when GST was introduced, online returns were also introduced, GSTR1 and all that. Subsequently, they also introduced e-waybill. Again, it was electronic way
Hello.
of hello.
Hello. 1 minute. One minute.
Can you put your I think sort of device on mute, please? Yeah. So they started with the returns online returns. Then they subsequently introduced e-waybill. Now e-waybill was introduced, and they also talked about this RFID sensor to be put on every vehicle. Now, obviously, that was not done to start with, has not been notified yet. But the way it is meant to work is that it's like a FASTag, device that we currently use when we sort of use highways, right? So once those devices are put on the vehicles, the moment that vehicle crosses a toll or a checkpost, automatic notification is being sent to the government department. So that is how they want to sort of automate everything. Then they introduce reconciliation to a, that rule 36.4 came. And obviously the last one was e-invoicing. Now e-invoicing, while the initial date which was proposed was 1st April 2020, it got deferred to 1st October 2020 for companies having turnover of more than 500 crores. And even then, a lot of us hoped or thought that they will not push ahead with this deadline and they will defer everything to 1st April 2021. But eventually they went ahead with this deadline, and sort of e-invoicing became a reality, at least for companies having turnover of more than 500 crores from 1st October 2020, which is just 2 months back. And now obviously government is going ahead and extending the e-invoicing applicability to smaller companies also. And we will talk about that in greater detail in the subsequent slides. Now, if you are following the developments, what they are saying is that based on whatever data you will upload in the e-invoicing portal, and we'll explain the process or discuss the process in detail in the next slide. But based on whatever you upload in the e-invoicing portal, they will also auto-populate the GST returns for you. Okay. They are also talking about sharing the e-invoicing to the customers. So the government itself, the government portal itself will share the copy of those invoices or e-invoices to the customers. So again, they're trying to automate the entire process. And today, if you spend time in preparation of GSTR1 and other monthly returns, that time will not be required to be spent, because a lot of those data, a lot of those reports would be auto-populated. There also talks about government doing away with e-waybill in the next couple of months. So once this e-invoicing becomes operational for the entire ecosystem, right now it is for more than 500 crores. From 1st January, it will be for companies having turnover of more than 100 crores. And if you go by the media reports, it seems that they will extend to smaller companies also after 1st April. So it's just a matter of time when e-invoicing becomes applicable on a universal basis. And the moment that happens, there is a good probability that they will completely do away with this e-way bill system. So e-invoicing will take care of everything. There are also reports of authorities trying to reconcile your income tax filings with your GST filings, and in case there are differences, notices are being sent. So what basically they are trying to do is automate the entire sort of compliance ecosystem. And once e-invoicing becomes operational, what will basically happen is that the moment you upload the data in e-invoicing portal, your entire compliance is taken care of through the portal itself, which means the substantial portion of time that you today spent on compliances would not be required to be spent, maybe from 1st April onwards, next year onwards. And the only thing that you have to bother from then onwards is maybe assessment and notices that you might receive on various issue. So to sum it up, the discussion so far, what is happening now is that we are in a very interesting stage where we are seeing tax technology getting more and more prominence in the tax compliance ecosystem. With this, I will hand over the sort of session to Karthik, where he will discuss finer nuances of e-invoicing. And then towards the end, we will start taking your questions also. So Karthik, over to you.
Thank you, Abhinav. Thank you, Shyam, for the initial introduction. Good afternoon, everyone. So what I'll be covering in furtherance to what Abhinav was explaining is what is e-invoice and who is required to comply with the e-invoicing requirement, and why e-invoicing is required, and what are the consequences. Let's say if you're not raising an invoice, what are the GST law provision says if a non-compliance is done. So these are the broad areas I'll be covering up, and into the nuances also I will be getting into, let's say, into the details of what are the elements of an e-invoice and what is the schema requirements that the government says. So these are the broad areas that I'll be covering. During the session, if you have any queries, you can post it in the chat box, and we'll be happy to address them. So to start, I'll not go through the entire process of how an e-invoice is generated, but I'll just say what is an e-invoice. It's just the invoice that you are generating today from your ERP system. The same invoice can be treated as an e-invoice if it gets the not approval from the government. Okay, so just think it's the exact invoice that you have. The same invoice, if it goes to the government portals and comes back with a QR code and IRN, it is treated as an e-invoice. Okay, so now how the entire process happens, we will go through that in detail in the subsequent slides. Now, the government wanted to introduce this at the beginning itself, at the beginning of 2020 for 100 crore plus entities. When they made this notification, the systems were not ready. Even the industry was not ready to make the e-invoicing implementation. But somehow government ensured that 1st October, for 500 crore plus entities, they have introduced the e-invoicing, and they have given a 1 month period of what I can say, it is like a waiver period. Okay, when I say waiver, only the penalties and the consequences they have waived. They didn't waive the requirement to generate the IRN. So from 1st October, for 1 month period, they gave the break. But for that invoices that is generated during the October month, you should have raised the IRNs subsequently. So that was the relief that was given to the taxpayers. So government ensured that from 1st October, for entities having turnover above 500 crore, e-invoice was introduced. That is the first phase of implementation. As Abhinav said, the media reports are saying that for entities having even 50 crore plus, the e-invoicing may be implemented from 1st April. So now the main core area that we are focusing is 100 to 500 crore entities, where the implementation time is not very long. It is from 1st January, the government is saying we are gonna implement for 100 to 500 crore entities. And at this time, the systems are ready. So the government has ensured that their systems are working in fine, and they have tested it in the first phase for 500 crore plus entities, and Till now, except for minute glitches, there are not many issues at the government end for generation of IRNs. So which is a good thing. At the same time, for the entities under the 100 to 500 crore bracket, it is a caution point that the government may not extend or may not give much of leeway for them from the 1st January deadline. And what constitutes an e-invoice? We have just said it's the IRN and the QR code generated from the IRP portal plus your invoice constitute an invoice, but it is not that simple. So what happens is the provisions are not clear as of now, whether I should include all the requirements that is required for an e-invoice as part of my printout. It's still a question mark. It's an ambiguous area, but again, that part also I will touch upon at the end. So please let me know if I'm going really fast, so I can slow down, and any queries during the presentation, please post it. I will address it then and there. So applicability of the e-invoice to what documents? First question, and second thing, to whom it is applicable. Okay, as I discussed in the previous slide, first it is applicable for 500 crore plus entities from 1st October. Second, for 100 crore plus entities from 1st January. But let's say if you're a service provider who is having 500 crore plus turnover, but if you're providing only exempt services, then it is not applicable for you. Okay. When I say exempt, it is pure exempt services, not exports. The government is saying even if you're doing export of services or export of goods, e-invoicing is required. So who are the service providers or who are the suppliers for whom e-invoicing is applicable? That is the first critical point. Then what are the documents on which e-invoicing is applicable? Right now, the government has made it applicable only for invoices, debit notes, credit notes. And when I say invoices, debit note, credit notes, these credit notes does not include commercial credit notes. Again, the focus is on the taxable transactions, and only those invoices or the documents that carry tax was brought under the ambit of e-invoicing. Now, as a exception, okay, when I said only taxable transaction has to be reported, as an exception, let's say you are rendering a service which is reverse chargeable, which means in your hand it is not taxable, but you are the supplier of such services and you are not levying tax on it. Even those transactions comes under the ambit of e-invoicing. So these are slight deviations that they have made, but for these transactions, e-invoicing is applicable. Now, your exports, again, there is no tax levy on it, but export transaction has to be reported into the IRP portal and you have to generate an e-invoice. Business to government. So business to government, again, there are two limbs to this. One is, let's say the government agency is not a registered person, then it becomes a B2C transaction, again, where there is no requirement to raise an e-invoice. But the moment the government agency or government organization is a registered person, then that becomes a B2B. All along, you might have treated this as B2G, but for e-invoicing purpose alone, you have to treat this as B2B and report it in the IRP portal for e-invoicing generation. And the transactions where, let's say you're going to generate an advance receipt, delivery challan, all the other documents which are required under the GST law, where there is no tax impact, those transactions, e-invoicing is not required. Okay, so these are the few of the key notifications. The first notification number 30, which was initially introduced for 100 crore plus entities. Again, it was amended through notification number 61 saying where they will implement it on from 1st October for 500 crore plus entities. Then notification number 88, that is again amending notification number 30, saying that for 100 crore plus entities, the introduction of e-invoicing will be from 1st January 2021. Then CGST rules, rule 48. This is the point that I was trying to make, whether what are the contents of an e-invoice. Okay, it is critical because from tax perspective, you might be generating an invoice today, the invoice is complied with Rule 46. Okay, Rule 46 gives a certain criteria. Let's say you have to have the GSTN of the supplier, GSTN of the recipient, HSN, and the tax amount has to be displayed on the invoice. Such details are available. Now, what's happening is the new Rule 48, which is bringing in the e-invoicing requirement, is creating its own requirement list. Okay, and there is difference between what's for Rule 46 is saying and what Rule 48 is saying. So Rule 48 has certain additional fields. When I say additional fields, something like serial number or the state code, or you can say whether the supply is a service, yes or no. Such questions are there in Rule 48, and if you read it plainly from the law, it looks like for if you are falling under the e-invoicing category, that is 100 crore plus and 500 crore plus, you have to comply both with 48 and 46. Okay, so this is a gray area where we need to wait and see whether the government is going to give any clarification, whether the invoice that I was raising all along, that is sufficient, or I need to add additional fields which are bringing in by Rule 48. The government, as part of its notification, has mentioned that around 10 websites will be there. So 10 portals. For a user, it is not relevant because these 10 portals are made majorly to avoid any server break failures due to the volumes. Okay, so each of these portals take the loads on its own. So it is not for the user, but from government end, they had announced that there will be 10 portals that will be taking the entire e-invoicing load of the country. This is one of the key questions, but the government addressed this question through their FAQs. But in the law, again, it's a gray area right now. Whether the exemption that they have given is for the entity as a whole or it is transaction based. So when I say transaction based, let's say I'm a bank, I am also selling my laptop, okay, to a B2B customer. In that case, the transaction has nothing to do with the banking transactions. In that case, whether the e-invoicing is required or not was the question. But as part of the FAQ, the government said that these are the exemption that we have given is for the entity as a whole. So if you're a banking company, for the any transaction that you're performing, the exemption is available. Same way, the exemption is provided to insurance companies, SEC units. Again, I want to stress it's only SEC units. So FTWC gets covered as an SEC unit, but SEC developers are not included in this. And GTA, Goods Transport Agency Services. For these specific category of persons, the entire e-invoicing requirement is exempted. So now I'm coming into the flow of e-invoice. All along I was explaining an e-invoice has to be generated, e-invoice has to be generated through the portal, but how you generate these e-invoices? What is the flow? What you need to do to generate these invoices? This is the entire process flow. This is the process flow even given by the government. So as a user, for you, the government is saying you should not feel any change. There should not be any change or burden on the user. They're saying your ERP service provider or your current service provider, let's say a consultant who is providing a GSP service, they should be able to take the entire load of sending the data to the government and bringing the data back to your ERP. Okay, so let's assume a very vanilla situation where your ERP is already having an API connectivity with the government. So the government has released certain APIs. APIs are nothing but a connectivity software. You can consider it as a connectivity software between your ERP and the government portal. These connectivity software, if your ERP provider has installed as part of his system, then that's a vanilla situation where you don't have to bother about any of the consequences for sending the data to the government. Okay. But from tax perspective, yes, you have to keep in mind, you have to make a lot of changes into your in-house SOP and everything. But for sending the data, your ERP service provider has already linked the API, which means The way you are generating your invoices today, you will continue to raise the invoices. You will push the information through your ERP, and your ERP, if it is gonna capture all information that is required for e-invoicing requirement, then that will push the information to IRP portal. When we say e-invoicing registration portal, there is IRP portal. So we have said IRP registration 1, 2, 3. These are the different portals. As I said, 10 portals are there. So we have kept them. And these portals will do a duplication check. So the duplication check happens based on your invoice number and your GST number. Okay. For this GST number, for this invoice, for this financial year, the IRN, whether the IRN was already generated or not. So this is one of the check. But apart from this, there are a lot of validations that are done. The validations are the points where we face most of the issues, because the government wants the data in certain specific format. As we have mentioned, it needs the data in a JSON format. Okay, that is the first challenge, how we are going to generate JSON from your ERP. Second challenge is, what is the data that this JSON file contains? The details of your invoice has to be in the specified formats the government prescribes. So the government has prescribed certain specific fields. Let's say your HSN has to be so and so, your description has to be within so much character limit, your date has to be in this format. So these kind of requirements are there for the JSON file generation. So let's assume you successfully push the data as per the requirement of the government. So the JSON is generated from your ERP. It is pushed to the IRP portal. The IRP portal does a deduplication check and validates all these requirements. If everything is success, the IRP portal creates a IRN. IRN is a 64-digit hash. It is like a digital signature for you. So this IRN number, along with the QR code string, is sent back to your ERP. Okay. This QR code is not sent as a picture format, it's sent back as a string. So both comes back to you in the JSON format. Your ERP has to read these documents and then publish this information on the invoice format. So the existing invoice that you have will get populated with an IRN number and a QR code. Then that becomes an e-invoice. That is a valid document as per the law. So now this entire process of your invoice flowing to government portal and coming back to into your ERP does not take more than 3 to 4 seconds. I'm not exaggerating, but that is how the entire system is working. If the flow is seamless and there are no errors, this process doesn't take more than 3 to 4 minutes. You have an e-invoice. It is as good as you are generating your invoices today in your ERP. Now these are the 2 steps now. What is this data the government is going to do? The government doesn't keep this data within the IRP portal for more than 24 hours. So they push the data to the GST system. That is the third limb that we have here. So why does it push to the GST system? Because the government want to automate the entire ecosystem of GST. So when they are sending the information to GST portal, your GSTR1, that is your outward supplies, gets auto-populated. And your GSTR2A, for your customer, it is his purchase information. So for him, the GSTR2A gets populated. Now, this information goes to your buyer. Your buyer can verify whether he got the input tax credit or not, and he can do his 2A reconciliation. Now, the government has said that right now they are at the phase 2. Maybe at phase 3 or phase 4, the buyer will automatically receive the invoice itself. You don't have to even send the invoice. At the current phase, you have to take this invoice, either in a PDF format, send it to your customer, or in a printed format, you send it to your customer as per your contractual terms. But in future, the word is the government at phase 3 or phase 4 gonna make this also automated. So the invoice directly flow from the RP system to your buyer. So you don't have to even send those invoices. So this is, I'm going to repeat the points. So IRP is the invoice registration portal, the portal that is governed by NIC. So this is the same NIC portal which was generating the e-way bill earlier. It was taking the e-way bill loads. Now they have introduced e-invoicing portals also. Then the IRN number. IRN number is the combination of your GSTN, invoice type, supply invoice number, and the financial year. So these combinations they use to generate the IRN number. And if these combinations, let's say, is repeating, so that will be thrown as a duplication error. Next is the QR code. So QR code is a very critical point because the government is saying even if you don't print the IRN, QR code has to be printed on your invoice. And QR code, because it already contains the IRN number also. And for any transportation or the authorities have the mechanism to scan this QR code and validate whether the invoice is valid or not. And for future, this will be a technology where your buyers, your customers will be able to automate their purchase registers also using the QR code, because this is giving all the key elements. As you can see on the screen, it is giving the GSTN of the buyer and the seller and the invoice details, invoice number, date, value, and the item details and HSN. These are the key elements that is required for the any tax purpose. So these informations are captured in the QR code. And if your buyer can automate a system in future, they don't have to even prepare a purchase register, or this will help them into recording the purchases in a best possible manner. So I was referring to E-invoice schema. So E-invoice schema is nothing but what are the contents of the invoice. So I was referring to Rule 46 and Rule 48, right? So invoice schema is provided under Rule 48. Rule 46 used to govern the contents of the invoice from the day one, that is from the introduction of GST. But Rule 48 gives the schema requirement. So the total schema requirements are, there are 132 fields. When I say 132, there's nothing to worry about the number, because these fields are something, let's say address. Okay, address itself has around 8 fields. Okay, your address and the supplier's address, similarly recipient address and the dispatch from address. So each address field will, let's say, has 8. So multiplied by 3, you have 24 fields for address itself. Okay, but why they have bifurcated is because the system can read address not as a paragraph, which used to be earlier. In earlier invoices, it used to be a paragraph of information. Now the system is not going to read it that way. System has to validate each field of the address. Let's say the number, the PIN code, the state name, the city, and everything gets validated through the system. So that is the reason. So each one of the contents of your address gets split into a individual field for invoicing requirement. That's what e-invoicing schema does. Now they have made 31 mandatory fields and 32 conditional mandatory fields. When I say conditional mandatory, it is like, let's say you say you want to generate e-way bill along with the e-invoice. In that case, the moment you say e-way bill needs to be generated, yes, then the requirements of e-way bill becomes conditional mandatory fields. So such are the conditional mandatory fields. But for the sake of our conversation, keep it as mandatory fields, let's say 31. These 31 fields alone, if you send to government portal and get back the IRN and the QR code and print it on your e-invoices, that is sufficient requirement. Now, one focus is people tend to focus only on mandatory or conditional mandatory fields and let go of optional fields. But it is very important. Please go through all the optional fields also, because for your business requirements, okay, there are different businesses, different sectors, different industries require different kind of declarations on the invoices. So ensure that optional fields are also clearly evaluated, and what are the optional fields that you want to print on your invoice, you need to do a thorough check of it. Now, we are stressing on the point of what needs to be printed on the invoice. The QR code, right now the word is, if you print the QR code on your invoice, that is sufficient. But GST INV01 is nothing but the schema, the format that the government has given. These fields prescribe certain additional information also. So on a conservative basis, it is better because hardly 4 to 5 additional fields are there. You need to, if you can incorporate these as part of your invoices, then you're complied with both 46 and 48, the rule 46 as well as rule 48. But it should not happen that today I'm following rule 46 and I want to print only the QR code and the IRN number as part of my invoices. Tomorrow the authority says that you're not following or you're not complying with rule 48. To avoid that, we can include the requirements as per GST INV01 also as in our invoices. Any questions till now?
Karthik, I believe questions in the window.
Yeah.
We will take question at the end, Karthik. You can resume.
Sure. Okay. So now on the connectivity, how the connectivity will happen between your ERP system and the government portal. How are you going to send this information? Let's say I just give a from the beginning, whatever we have discussed what information needs to be sent to the government portal and why we have to send this information. Now, once you know that you're finalized, let's say you're finalized based on the optional fields, mandatory fields, conditional mandatory fields, you're finalized. This is the information that I'm going to send to government. This is all is required for my business requirement. Once you're done with that, how are you going to send this information to the government portal? You have multiple options, choices. Let's say the API based. The government has given its own API. It's a connectivity between your ERP and the government portal. If for large organizations, let's say 500 crore plus entities, they said API direct connectivity is possible. When I say the API direct connectivity, I'm an organization, let's say XYZ, and I can, through my tech team, I can integrate my ERP directly to the government portal, and I can send the information directly to the government for generation of IRN and QR code. There is one API base. Under API base, you have multiple options. API can be direct API with the government or API through your GSP, okay, and then API through your ERP. Let's say your ERP service provider also can get the same API from the government and integrate his ERP directly. So all the customers under this ERP gets this facility seamlessly. Okay. Now GSP based, you appoint a GSP. This GSP provides you an API, and he connects your ERP to the government portal through his GSP API. One key point here is that for 100 to 500 crore plus entities, currently the government has said that API based, direct API based connectivity is not possible. So 100 to 500 crore plus entities has to mandatorily either go through his ERP service provider or go through a GSP for API connectivity. Next is the offline tool based. The government has released a offline tool. This is majorly for SMEs and small scale entities, wherein the number of transactions is not huge. You can key in or you can populate the details of your invoice on a schema that the government has given. Populate this. It is almost like the GSTR 9 that you are filing today. It's an Excel utility. You fill this and upload it into the schema. You can generate the e-invoices with IRN and QR code. But this invoice that is being generated, you don't have much of a feasibility to customize it. Let's say you are using a specific format today with certain declarations in your invoice. Such facilities are not made available in the offline tool based, since it is only for an SME or very small scale industries. So they should be able to use the invoices generated by the government in the specified format. Next is GSP based. GSP based, you have multiple options. Your GSP service provider can give you an API connectivity through his API. or the GSP service provider can give his own ASP. They do provide their offline tools similar to the government's tool. There are different GSP service providers providing their own tools. These tools help you not only to generate the IRN and QR code, but also for storage purpose, and your MIRs and your reporting purposes are taken care by the tool provided by the GSP service providers. So the relationship between E-invoice and the e-way bill, this is again one of the critical points where the government has focused a lot, and the connectivity, they wanted to make this happen from December itself, but due to various issues they had faced, they have deferred a few of the implementation points to 1st January. Now, what is that e-way bill and e-invoice has to do? See, the purpose of e-way bill introduction in 2008 was majorly to control movement of goods and avoid any tax evasion through movement of goods without payment of tax. So the government wanted the data on how the goods are moving and whether the goods that are moved from one location to another has suffered tax or not. Now, since this objective of e-way bill is getting fulfilled by e-invoice itself, e-invoicing is you're generating an e-invoice even before you move the goods. So the objective is getting fulfilled through e-invoice. So the requirement for an e-way bill becomes a question mark. So the government has through its press releases mentioned that in future they may do away with e-way bill requirement. But currently e-way bill stands. We need to comply with the e-way bill requirement. The reasons might be plenty. One of them is that e-way bill is applicable for most of the transactions, even for a transaction where you don't need to raise an invoice, like a delivery challan based transactions, or moving a goods on a knockdown condition. For all these transactions, still e-way bill is required, but e-invoicing is made applicable only for a specified set of transactions. Maybe until the government makes e-invoice as a universal applicability for all transactions, e-invoicing is required. Till then, I think we can assume that e-way bill will continue. Okay. Now, to quickly understand the relationship between the e-invoice and e-way bill. So first, you generate your e-invoice, then you generate your e-way bill. Okay. Now they have made a connection between these two, saying, let's say you are generating your e-invoice today, you're a service provider or a supplier who's having more than 100 crore turnover or a 500 crore turnover for whom e-invoicing is applicable. Then you need to generate the e-way bill only from the e-invoice portal. You cannot generate the e-way bill for that transaction from the existing e-way bill portal. That is very critical. So they have made an interlink, and this system will be applicable from 1st January, which means going forward, unless you generate an e-invoice, e-way bill cannot be generated, so you cannot move your goods. And further, cancellation of the e-invoices. Again, this is also made it as a sequence, wherein first you need to cancel your e-way bill, and then you can cancel an IRN. This is because it's the same logic. First you generate an IRN and then you generate an e-way bill. Same way, when you want to cancel, first cancel your e-way bill, then only you will be able to cancel IRN. Otherwise, there will be a big mismatch between these two. So it is a very, very valid validation that the government has. So the same concept in detail. Okay. So now let's take few examples in the scenarios. Okay. Let's keep 3 documents. One is your invoice that you generate from your ERP. 2 is your invoice that you are generated from the government portal, which becomes an e-invoice. The same ERP invoice becomes an e-invoice. 3rd is your e-way bill. These are the 3 documents that we are talking about. Now, for any cancellation, all 3 are synced, because First, you generate the invoice in your ERP, then it moves to the IRP portal for e-invoice generation. Then you will generate your e-waybill. The cancellation process has to be in the same reverse sequence. Let's say you cancel your e-waybill, then only you will be able to cancel the invoice in your IRP portal. Then you can cancel it in your ERP. There might be situation where you have generated the invoice in your ERP and you have not even uploaded it into the second stage, that is the IRP portal. In that case, no issues. You can cancel the invoice directly in your ERP without any issues because it never went to the government portal. But if it moves on to the second stage of going into the IRP portal for generation of e-invoice, then there is only one option for you. Either you cancel this invoice within 24 hours in the IRP portal, then you come back and cancel the invoice again in your ERP, or if the 24-hour time limit has exceeded, then the only option is to go to your GSTR 1 amendment. Okay, that is one. And then there is possibility of generation of a credit note and debit note, but there is a question whether you can issue a debit note or credit note towards a for a wrong raising of an invoice, because the section 34 doesn't specify this kind of scenarios for generation of a debit note or a credit note, because it is very restrictive. The industry practices that now, let's say I have generated an invoice and it's been 24 hours and I have no other option to cancel that invoice. I raise a credit note. Even the credit note goes through the IRN generation process, and then I reissue a fresh invoice. This is the process that is being followed. Amendments, a clear no for amendments. Okay, once you have generated an IRN, or once you have sent the information into the IRP portal for e-invoice generation, there's no amendment possible to that. Okay, the government has not given any feature for amendment of an e-invoice, so that is very clear. So there is no for amendment for e-invoices, but amendment invoice in your ERP, yes, definitely possible. You can amend was in your ERP to the extent the information that you have not sent to the government portal. When we were discussing, we said 32 mandatory fields, right? Only these fields you have sent to government. There might be certain declarations, there might be which has not flown through the IRP process. In those cases, you can make those amendments. Information that is gone to e-invoice, amendments not possible. Only a cancellation is possible within 24 hours. Amendment to e-waybill, as you will be already aware that e-waybill amendment was not permissible from the beginning itself. There is no chance of amendment of e-waybill. Any changes in your GST returns, but this is an anomaly right now because how are we do the reconciliation in future? Question mark, because GSTR 1 lets us do amendments. Let's say I can even go and change the state name, or I can change the GSTN of customer. If I'm going to do such amendments in GSTR 1, but I already generated the invoice as part of my IRN generation, then how I'm going to do the reconciliation between these two as part of it? Because government already has one set of data, which is for e-invoice, and this is one set of data for your GSTR 1 and GSTR 3B, then the reconciliation between these three will become a nightmare. So few of the issues relating to e-invoice, you have to maintain the records for 72 months. When the government is saying in the IRP portal, they're going to keep the record over 24 hours. When the process of getting this data again, it's not that you will not be able to see this information in the IRP portal again, but to see this information, you have to key in this 64-digit IRN number or the acknowledgement number generated by the IRP portal individually. Once you enter that in the IRP portal, you'll be able to see the invoice that you have generated in the past. But you will not be getting any reports or a statement saying that these are invoices for which you have generated IRN. In that case, they are asking us to maintain the record for 72 months, which means you have to have a robust system. Whenever an IRN is generated and an E-invoice is generated, these has to be stored for future reference during the audit. And then right now, E-invoicing is not applicable for all transactions. Okay, as I said previous slide, there is possibility of certain gaps between what you have uploaded for e-invoicing purpose and what you have reported for your GST return purpose. Now, this is the next stage. Let's say I'm filing my returns. My part of my return is auto-populated by the government through the e-invoicing system. That is, my B2B transaction is auto-populated. But have certain other transactions which are B2C or RCM, exempt. It can be multiple transactions. So every month I need to see in my books of accounts, let's say I have a turnover of 100. Out of the 100 turnover, 80 have uploaded through a e-invoicing portal. The balance 20 is B2C and different transactions. I perform this reconciliation and bring in this leftover information to my returns. So this is going to be a cumbersome process to start with until the government going to make the entire e-invoicing is applicable as a whole for all transactions. We may have to deal with these kind of reconciliations in the future. The last point on the two-way reconciliation. Again, two-way reconciliation is not only a specific point relating to e-invoicing. It was a problem for the taxpayers from the beginning itself. But once e-invoicing is implemented, the two-way reconciliation has to be seen from two perspectives. One is the vendors who are not liable for generation of e-invoices, and the vendors who are generating e-invoices. Then you have two set of data for two-way reconciliation also. So as I said, the same reason, until the government completely brings in e-invoicing requirement for all taxpayers, we may have to face these kind of reconciliation issues. So now we have seen what is an e-invoice, how to generate an e-invoice, and what are the issues that we have in generation of e-invoice, how the reporting is done. Now, what will happen if you don't generate an e-invoice? If you're not generating an e-invoice, one, it is a non-compliance. All of us know that it is a non-compliance. But because of this non-compliance, what are the consequences? The GST law, compared to its peers, let's say the erstwhile laws like service tax or excise, is more stringent in terms of its penalties or in terms of the consequences. So any non-compliances will lead to either detention of the goods, or depending on the consequence or the tax amount involved, it may go into penal action also. So non-generation of an e-invoice at the beginning the government may give some levies, but in future the government is going to take it very seriously, and it is going to impact the operations in total. And for your customer, most importantly right now, even if you are let's say a supplier who's less than 100 crore, we have faced scenarios, even clients that I have come to me saying whether I can do it voluntarily. I was asking why you want to do it voluntarily, but the reason is that they have customers who are large entities, and those large entities want let's say want their input tax credit to be e-invoice compliant, because they have already implemented their systems in their books. Now when a small service provider is giving an invoice to him, they are like, why this is not an invoice, is it not applicable to you? These questions are arising. So your customers are also going to force you to comply with e-invoice in future once it is made applicable to you, which means from their perspective, they are safe on the input tax credit that they are availing. The invoice that you are giving, if it is not having the IRN and QR code, for them also it's a risk, because for them, the input tax credit that they are availing can be challenged. we are coming to the final part of the presentation, wherein these are the steps that you have to take for implementation. So how are you going to implement the e-invoicing requirement as part of your ERP or as part of your organization? I will say most of the elements is relating to gap analysis. When I say gap analysis, ensure first check whether your ERP, what is the capability of your ERP? What load can your ERP take? Do you have the leeway to customize, make changes in your ERP? If the answer to this is yes, then you may proceed to an automation requirement. Or if the answer to this is no, then you may have to see the alternative approaches, whether you can do a manual upload, whether you can do a SFTP implementation. So you have to check what is the capability of your ERP first, and then check whether automation is possible for your organization, for the kind of business that you have, for the kind of transactions that you have, whether automation is possible or not. Then make the changes in your ERP in such a way that it meets the schema requirement and also your business requirements, and ensure that all the government requirements are met with. Here, catch point is that the government has released 3 schemas as of now. We are currently at version 1.3. So ensure you have in-house team or your consultant, whoever is performing, is on a long run basis. So any subsequent changes that's going to happen, let's say it may happen in another 3 months, 4 months. So those subsequent changes and updates are also carried out in your ERP. Once let's say your ERP is ready and you're able to make these changes, then the entire process is the same. Your ERP can send the JSON file to the government portal and get the IRN. But ensure you generate the required MIS also, the reports. The reports are very critical because the issues that we were discussing, the reconciliation issues, it's gonna trouble you at a later point of time. Maybe after 2 years or 3 years, the government authorities will knock your door and say, you have reported 100 for your e-invoice generation, but in your financial statement on your GSTR 1 and 3B, you have reported a different number. What is the reconciliation? So when you are planning your ERP implementation for e-invoicing, ensure that these reports are generated. So for your future purposes, the entire documentation is ready. The last slide, what is the experience that we have based on our implementation at phase 1? First, foremost thing is ensure the option that you're going to choose, like the options that I had explained. One is API, one is through the GSPs, through the government portal. Any option that you're going to choose is suitable to your organization's ERP, whether your organization employees, what is suitable for them. Choose such option, because the moment let's say you want to automate, but the number of transactions that you have might be less. Okay, even in that case, let's say you go for an automation, but the automation should not create hindrances into your operations. So ensure the option that you choose suits your ERP and the operations of the organization, and spend huge amount of time on UAT, because we have seen instances where we have done the implementation, but post implementation during the production, let's say post October, in November, when the client is trying to generate a specific invoice, they have faced issues because at the UAT stage they didn't test these kind of scenarios. Now post production, when they are trying to bring in a new scenario, let's say it's an SCZ invoice or an EOU invoice or an invoice where there are 2 line items. One line item is having tax, the other line item is a free of cost supply. Those scenarios were not accepted by the system because the ERP was not prepared to meet those requirements. So the clients had to wait 2 to 3 days, stopping their movement of goods. So you'll understand how critical it becomes, because the goods are at the gate for movement, and the invoicing team has to release the invoice. But at the time of releasing of invoice, they face these issues. the changes that you have to make to your ERP doesn't happen in 1 or 2 hours, because even if you have an in-house team, these kind of development requires at least 2 days or 3 days. So these goods had to wait at the gate for 2 to 3 days. So ensure the UAT is done properly, so the post-production issues can be avoided. And training your employees both with tax knowledge, because few of the organization follow a process where e-invoicing is done by a separate team, not the tax team, not the finance team. A separate team handles the invoicing process. So entire organization is aware of the e-invoicing requirements, whether it's marketing team or your sales team, because a marketing person or a salesperson may come to you and tell that I need to give this amount of discount, or I have to do so much of amendments to the invoices that you have raised. But we have to make them aware that such changes are not going to happen the way it used to happen pre-invoicing. Pre-invoicing, you might have done it, but now you have to follow certain specific procedures. So set out these SOPs in your organization and ensure that every person, every stakeholder in the organization is aware of the e-invoicing requirement and the consequences. I think we are done with the presentation part. So Abhinav, we can take on questions and answers now.
Yeah, we can take questions and answers. Yeah.
So I'll read out questions one by one. Okay. Mr. Umar Shankar is asking if an invoice needs to be cancelled through credit note simultaneously due to some error, either both invoice and credit note need to go to government portal for e-signature. The answer is yes, sir. So let's say you raise an invoice, you have generated the IRN, then you raise a credit note, then credit note has to be generated. You have to generate an IRN for the credit note also. But if a scenario is such that in your ERP, you have created the invoice and then you have cancelled it, then you don't have, and you have not uploaded it into the IRP portal, then you don't have to do it. Next question, Mr. Dattatreya. Can we generate backdated invoice, or it is day-to-day invoice only? So it's a very good question. For generation of an invoice, you need to go back and see what are the invoicing rules. Okay, the rules pertaining to invoice generation has not changed. Okay, your time of supply remains the same in the tax laws. So for goods and services, there are different types of time of supply, right? For goods, most of the scenarios, before the goods leave your premises, before the supply starts, you have to generate the invoice, which means the goods have to be accompanied by an invoice. In that case, backdated invoice question doesn't arise at all, because along with the invoice, goods, you have to send the invoice, and that invoice has to be valid. So it has to be an e-invoice. In that case, for a goods, you have to generate the invoice immediately, unless only exception scenario will be goods sent on approval basis. The next is for services. Yes, for services, you have the leeway, because for services, the invoices can be generated within 30 days from the completion of the service, which means on 30th day, you can generate the invoice, and IR portal currently doesn't have any validations towards what is the date of the invoice. Even if now you want to generate an IRN for, let's say, an October dated invoice, you can definitely do it. But you have to keep in mind the time of supply requirements. From GST law perspective, you will be deviating. Next question from Mr. Ajay.
Karthi, just to add to your response, see, please note that the GST law has not changed. All the requirements which are there in terms of time of supply, in terms of invoicing, are still there. All they are saying is that when you print an invoice, you should also print QR code on that invoice. That's the crux of the requirement. Everything else remains the same. So whether you can do backdated invoice or not, I mean, the answer is still the same. I mean, the answer will not change. all they're saying is that before you send the invoice to the customer, before you send the invoice or give the copy of the invoice to the transporter, please have a QR code, because if you don't have a QR code on the invoice and if something happens at the check post and they find that there is no QR code, then there are issues. So in a sense, they're only asking you to print QR code. Now there are finer nuances to what that process entails, which was, I mean, discussed by Karthik in the last half an hour or so, but essentially that's the requirement. So whatever issues are there from a pure play invoicing standpoint would still remain. They are not going to be addressed just because of e-invoicing. Yeah, back to you, Karthik.
Sure. Thank you, Abhinav. Next question, Renuka Prasad. Is it possible to generate backdated invoice? How many days does system allow to generate backdated invoice? If the backdated invoice and date of generation are different months, data population GSTR1, which month? Okay, so plenty of questions there. I addressed the first question earlier. Right now, the IRP system is not stopping you from generation of an invoice for a backdated invoice. Let's say even if your invoice dated is October, even now you can generate the IRN. There is no restriction on that right now. Okay. So the question of how many days, no, there is no issue on that. If the backdated invoice date and the IRN generation date is different, how the GSTR1 is going to get populated based on the FAQs alone, because we have to see this practically how it's going to happen, because still now the GSTR1 is not auto-populated. But based on the FAQs, right now the government is saying it will be your document date, that is your invoice date. So that is the right approach also, if the government is going to take the invoice date for the GSTR1 population. Hope that answered the question.
Yeah, there's one more question I think that we missed. I think from Dattare, right? So I think can we take printout on our letterhead, or it is only as per the e-invoice format set in ERP system? Okay, so see again, the law is silent. What law says that whatever invoice you print today, assuming that invoice complies with the invoice content requirement, which is prescribed in terms of Rule 46, the invoice needs to have that content. There are certain additional contents which have to be put in terms of Rule 48. Once a document or once the invoice has that content, you have to put QR code also on that invoice, and then you can print that document. Now, it doesn't matter whether that print happens on your letterhead or it is in your ERP system. So that is, I don't think that is critical. What is critical is that the document that you print eventually needs to have all those prescribed contents. And I'm emphasizing on the word prescribed because it is not only prescribed as per 46. Now there is additional Rule 48, which you have to keep into, you have to keep into that perspective. If your document is having those contents, if the document has that QR code, now it's up to you whether you print on a letterhead or ERP. But if you are today using ERP to print your invoice, what we have seen after implementing e-invoicing for so many companies, that you should continue to generate invoice from ERP only, because otherwise, there is an issue of control. There are two documents which are going. So, all those issues can be avoided if you can use single platform to print the invoice. All you have to ensure is that that invoice has a QR code and the prescribed content. Yeah. Okay. Next question, Karthik.
Sure. Again, Mr. Dattatray, we are sending material within 2 to 3 days from the invoice date. That is, invoice date will be 3, and we are sending material on 6 or 7. In such case, can we generate e-way bill after 2 to 3 days of invoice, and can we add the details in our invoice? Definitely possible, sir. So you're saying you're going to generate the invoice today, okay? And the material will be moved after 2 to 3 days. So you can generate the IRN as well as your e-way bill on the date when the goods are going to move out. Next question from Mr. James. Can video provide SOP for standard invoicing scenarios? Definitely, sir, on case-to-case basis, because e-invoicing SOP is specific to entities. So your organization may have different kind of invoice cancellation, commercial credit note or debit note issuance, or any kind of a transaction. So it depends on each organization. So you can have your SOP prepared for your business. Next question from Mr. Karan. Will this webinar be available to access later? I think there will be a video recording of the webinar, which will be hosted on IACC portal. So I think you will be able to access the webinar again. The next question from Mr. Kumar. Can we do this without the help of ERP and GSP to start with? If so, what to be done? What about incoming material? What procedure to follow to avoid the credit? Very good question. To start with, definitely you don't need a support from your ERP or GSP. As I said, the government has released for MSMEs and small scale service provider a portal access and a schema wherein you will be able to generate the IRN and QR code. But only thing is you have to settle with the format that the government is going to give, and you may not have enough records of it. You have to maintain all the records of generation manually in your systems. So definitely you will be able to do even without the support of an ERP or a GSP. And on materials that is coming in, you are talking about the invoice. Right now, e-invoicing is not having any impact, except that if you are procuring a goods from a person who is required to comply with the invoicing, and he is giving you an invoice without IRN and QR code, which means that's not a valid document for you, which means you will not be able to take input tax credit on the document. So you have to insist on your suppliers that you have to give me an invoice with IRN and QR code. Next question, Mr. Fazil.
So one more point that you can do this e-invoicing without ERP, without GSP to start with, which means you'll go to the government portal directly and log in and upload those details, right? Because otherwise, if you go to a third party, he has to have some tie-up with a GSP at the back end. So if you want to skip GSP altogether, you go to the portal directly, upload the details, get the invoicing. The only caution point which we would like to highlight is that if you go to the portal directly, they don't store the data. So, there is no audit trail. So after a few days, if you want to see what data you have uploaded and there is some data retrieval which is required, that facility is not there. So there is no database which is being maintained. There is no audit trail. So if you're okay with that, go ahead. The other advantage of going through a third-party service provider is that you can use the same platform to also prepare returns. Okay. While they're saying that they will use the same data to prepare returns, but I think that will take time. That will not happen, or that will not be a seamless thing on day one. So, the advantage of using third-party tools, and there are multiple options in the market, that you can store the data, you have an audit trail. In fact, you can store the data for 7 years if you want. You can get various reports, you can get returns also from the same tool, you can also get e-way bill. So again, a choice which is based on your own specific requirements, the volume of transactions, and so on and so forth. So technically it is possible to go to the portal directly. But a lot of companies are saying that we don't want to go to the portal directly because it's like dealing with the government department directly. If I want to draw a parallel, though it's not an apple-to-apple comparison. You want to go to the department directly, then if the system is down, there's a help desk. So all those typical issues are there, but otherwise technically it's possible. Yeah, Karthik, back to you. Thanks.
Sure. Thank you, Abhinav. Next question from Mr. Fazil. QR code is mandatory only for B2C transactions for 500 crores. Currently, that is the requirement. Right now, what the government has done is they have waived the penalty up to 31st March, which means the QR code requirement is there for B2C for 500 crore plus entities, but there will not be any penalty even if you don't do it up to 31st March. But you have to ensure that you have complied with these from 1st April. And this B2C QR code is not required to go through IRP portal, is not required to get signed from the government. It is a system generated QR code, but it is linked to your API, your bank payment link. So this is a dynamic QR code where your customer can scan it and make the payment to you. So next question from Mr. Rajesh. It was a very elaborate session. How do we get the PPT so that we can train accordingly to our employees? I think IACC may share the link to the presentation or to for the webinar link, which you can access at a later point.
And in case you want customized training, you let us know. We can talk offline and discuss the next steps. Yeah.
So next question from Mr. Krishna. Is it compulsory for physical sign required in invoice? A good question. We were discussing about Rule 46 and Rule 48, right? Rule 46 says invoice has to be signed, okay? And a proviso to the Rule 46 says if the invoice is complied with Information Technology Act, then there is no requirement of a physical or a digital signature. This is what the law says. Now, what is the requirement of Information Technology Act? Even if an invoice has gone through the process of process which cannot be fabricated, then it considered as an invoice generated through a valid system, and it complies with the IT Act 2000 requirements, which means an invoice that is generated through e-invoicing portal is obviously gone through a valid system, which means we can assume that the physical sign is not required. Again, a very ambiguous area. What is the requirement? What is the ambit of saying that the system cannot be fabricated? All are questions, okay? Because as we were explaining previously, a manual option where you push the data through a manual keying in the government portal, question can arise that whether that is actually meeting the a non-fabricated system which the IT Act is requiring. It's a question mark. In those cases, I would say physical sign is required. So it is a very tricky question. But as per law, sign is required. Sign is not required only if you comply with the IT Act 2000. That's it.
So again, a practical aspect, while I think the law gives you that leeway to say that for e-invoicing scenario, you don't have to have a physical signature. In fact, if you want, you don't have to print also, because normally in case of goods, you have to print 3 copies of invoice, right? Where 1 copy goes to transporter, 1 copy goes to customer, and 1 copy is with you. 1 copy is with you. Again, a lot of people are saying that we don't want to take any chance because while technology is good, I mean, over reliance on technology, especially if the ecosystem is still not stabilized. People have their own point of view. So at least for the first couple of months, there are a lot of companies who are playing safe. While they can take advantage of a lot of these issues, they are still following the existing system only. I mean, obviously they are putting the QR code and all that, but otherwise, even if they have an option, they're still going ahead with signing, printing, and so on and so forth. Karthik.
Question from Mr. Fazil. What about goods sent on approval basis? IRN to be generated, or we can still send using delivery challan and e-way bill? It is one of a unique scenario. Definitely for goods sent on approval basis, the supply is not complete unless you get an approval. Okay, but there are restrictions on this. For how long you can send the goods on approval basis. If you're complying with them, you can send the goods only with the delivery challan and e-way bill. The moment you get an approval, that's the moment when the supply gets triggered. At that time, you have to generate the IR. What is the time limit to move the goods after generating e-invoice or e-way bill? So e-invoice as I said, there is no restrictions. You can generate the invoice and e-invoice today. Then you can move the goods tomorrow also. There is no time limit prescribed as of now. But e-way bill, definitely you will have the schedule of e-way bill where e-way bill is for so and so distance. Let's say for 100 kilometers, this is the amount of time. Though, so it is distance based. The e-way bill will be valid. Next question from Jitika. Okay, so she has answered the question. The webinar will be available in IACC website. Question from Mr. Karan. Is there any update on what distribution infrastructure will be established via issuer and receiver or IRP and receiver? As of now, there is no, if I understand the question correctly, you are asking about, let's say I'm going to generate the e-invoice. How this e-invoice going to get delivered to the ultimate customer? If that's the question, right now there is no clarity, or the government has not even given any inputs on this, because they're planning to implement it at a very later phase. Maybe at the end of e-invoicing implementation for all the services or all category of taxpayers. So right now there is no specific infrastructure for distribution of the invoices. Next question from Mr. Jacob. After raising invoice, how many days are allowed to deliver the goods from the shop floor? As I said, sir, you have to, these requirements are governed by time of supply. Okay, so if you want to move the goods, before the movement of the goods, the invoice has to be generated. And there is no specific restriction on, let's say you raise the invoice today and tomorrow if you're gonna deliver the good, there is no such restrictions at all. The law remains the same in this regard. Next question from Mr. Dattatreya. We are doing supply to educational institution and government many of them don't have GST numbers. So in this case, e-invoicing is applicable or normal ERP invoice will be due. If these organization doesn't have a GST number, then the supply becomes a B2C supply. Right now, the invoice applicability is only for B2B. So in that case, for you, the invoicing is not applicable, sir. So, but you have to ensure that your customers don't have GST numbers. Next question from Mr. Ajay. Whether we can follow bill to and ship to scenario after e-invoicing. For example, I ask vendor to deliver, say, air conditioner on his invoice to my customer. Vendor bill to me and ship to as my customer. And then based on this DC, we invoice to our customer. In the big project order turnkey, we ask various vendors to deliver material to site. And once all equipments are delivered, then we raise our final invoice. I'm not able to understand the question in detail, but if your question is that bill to ship to scenario is possible, 100% possible, and one of the requirements of Rule 48, we were discussing 48 and 46, right? 46 doesn't have a requirement of dispatch from, but Rule 46 doesn't have the requirement of dispatch from. But Rule 48 says you have to have the dispatch from details also. So scenarios where you are raising the invoice and to your customer, but the goods are dispatched from a third location, the third location, dispatch from location details are also captured as part of the e-invoice. Hope I answered that question.
So again, nothing is changing GST law. Whatever was possible is still possible. The rules per se have not changed. All they're saying is that you put your QR code on that invoice. That's it. So otherwise, everything is the same which was there before e-invoicing came into force. Yeah.
Mr. Kumar is asking how he can contact us. At the end of the session, I think IACC will share our contact details with you, so you can get in touch with us for any invoicing requirement. Can we move the goods 2 to 3 days later after completion of the month? Means month-end invoices can move to next month. Definitely possible, sir. As I said, GSTR 1, the government is planning to take it as the invoice date, not the IRN generation date, which means these invoices will still fall under the previous month, and you can move your goods at the beginning of the next month. Abhinav, I think we are, the questions are complete. We have answered all the questions.
Yeah, so thanks, Karthik, and thanks to all of you for a patient hearing. So I think just to summarize the discussion so far, so e-invoicing essentially is nothing but you're printing QR code on your existing invoice with some minor modifications on the content part. But what is important in this entire process is that there are some finer nuances which have to be taken into account, especially if you want to automate the entire process, and that too, especially in cases where the transaction volume is on the higher side. For those kind of scenarios, I think we need to take into account multiple factors before you can say that you are ready to implement e-invoicing. So I mean, in other words, it's not a plug and play sort of structure. You still have to spend some time, especially if you want to make any integration with your ERP. With this, I think I hand over the session back to Mr. Jose, who can then sort of say a few words. Yeah, thanks. You're on mute, sir. Mr. Jose, you're on mute.
Thank you, Abhinav, for that presentation. I request you to put on the last slide, maybe with your contact details, so that will help those members who are still there. Yes, that's the detail. So my special thanks to BDO. Apart from all the things that Shyam, our chairman, said in the beginning, I would like to highlight that BDO is specially focused on using digital technology in the context of the evolving compliance market, and therefore is a good partner to help at least our members and the larger companies who are going to use this service of e-invoicing and e-way bill to migrate to something which is reliable, saves them time, brings efficiency, and in the end reduces the number of headaches and notices, and thereby helping them to focus on their business. And therefore, through IACC, our objective is to help our members continue to grow. So thank you very much, Abhinav and Karthik, for a wonderful session. I think we have seen already in the chat, many people are saying the same. It's nice to have BDO as a partner for this, and we look forward to your support, at least for some simpler and easier questions if our members reach out to you, because in this way we build and help everyone grow and the ecosystem grow. This is the vote of thanks also, especially to all those who took time to join for this session. January is not very far away, and these new rules will kick in. So let's hope everybody can be ready and geared up to manage this. At this point, I would like to especially also announce our next upcoming event, which is the Green Tea 2020. Usually the year is not complete without the golf event by IACC. It's an event for which a lot of people wait almost till the end of the year and look forward to it. We decided to go ahead with this event, and I'm happy to say that a lot of senior executives from NetApp, Mindtree, Hewlett Packard, Airbus, these are the kind of people who come to play this golf tournament at the end of the year as they relax and set sights to make strategies for the next year. The event is in the Prestige Golfshire campus. Many of you are aware. It's on the 24th of December, one day before Christmas. But in any case, hopefully the mood of relaxation will be there, and it's a good time to connect and collaborate. Please reach out to Jitika, those that would like or would be interested to be part of that event. I just shared now the screen of that event. So hopefully we will continue to bring opportunities for our members to network with each other, to build their collaborations and improve their business and improve their, let's say, vendor pipeline or supplier pipeline or customer pipeline. So please make use of this opportunity if you're in Bangalore. Please reach out to Jitika for further details to improve visibility for your organization at this event. In the end, of course, thank you all for being here on this call. And now I have a small request, at least for all the speakers who presented and the team from BDO, and also to Shyam and Jitika to take a final screenshot and image, which we can share on social media. This we are doing also because many members who could not join us today would also see the video of this recording. And so we link it in social media. And to make the post, we want this group picture. So I request those of you, who spoke, and some of the other participants also, if you're okay to turn on your camera. So I disable now the screen. I request those who were, yeah. Can you hear me, Abhinav? Just to check.
I can hear you. I can hear you.
Okay. So can you remove the PPT, unshare it? So I just share the big screen with 1 second, with the main banner of the event. This is so that those members who missed the event can see it on social media and follow the full video and reach out to you. So let me just check whether they are able to. Yes. So Abhinav, can you hear me now? And
yes, we can.
Yes.
We can.
Some internet problem. Okay, so it takes a couple of seconds to change the screen back and forth. So maybe our team will let us know as soon as it's done. Yeah. Okay, so I take one without the poster as well, because that takes a little bit of a time. Cancel. Yeah. Okay. So just 10 more seconds and we are done. And I think if it's okay. Is it okay? Okay, so with that, I think thank you all for being here and taking time out. We wish you all a very great year as we enter 2021. We hope we are all prepared and compliant in every sense of the word. And thank you, BDO, especially once again, for ensuring that you were able to lead us through this new compliance requirement. And our members will surely benefit and be prepared so that they can focus on their business and help to grow their company and the economy at all. Any last words? If Shyam, you are there, you would like to add a few words?
No, very good conclusion, Jose. And once again, thank you very much, BDO, and specifically Abhinav and Karthik and Evita, to you two guys for reaching out to IACC and making sure that you partner with us in delivering this very informative session to all our members. Certainly a very important matter, and as Jose pointed out, a matter of regulation and matter of compliance. So once again, on behalf of the Karnataka chapter of the Indo-American Chamber of Commerce, I wish to thank all the attendees of this webinar, and specifically a BDO. And I wish to extend my thanks to Jitika as well in pretty much hosting this particular event. So with that, I think we can wrap it up. Thank you all very much. Have a nice evening. Have a nice rest of the day. Bye-bye.
Thank you.